Equity mate!
I will say this about investing. Everything you do learn is cumulative. What I learned.
G'day Equity Mates, Ren here with another summary of our Thought Starters weekly email. This one for Monday the 8th of July. Now we kick off with a ad for our YouTube channel, but if you're watching this or if you're listening to this, you've obviously already found our YouTube channel. So all I'll say is make sure you subscribe so you see our future content. We're going to really try and make a push into more YouTube videos and YouTube content. So if you like Equity Mates, if you want more content, YouTube is definitely going to be a place that you should be looking out for. So on to Thought Starters this week. And to kick it off, we start with two very different investor letters from two very different funds. So from time to time, we feature letters of some of the most prominent investors to the people that have invested with them. We always feature Warren Buffett's letter when it comes out, Howard Marks' memos and stuff like that. But we were recently reading a few Q2 letters that have been released at the start of July, and we were struck by the differences by two in particular. One that was focusing on finding individual companies and investing in them for the long term, and then another company that was more macro focused and was actually very short, was betting that the market was going to go down. The company that was focused on long-term outperformance was up 37% year to date, and the company that was net short was up 17.5% year to date. So we've included both of those links just to sort of, they were both interesting. Both of their theses were interesting, and some of the companies that they were investing in were interesting. So that's always good to read in these letters. But it also just illustrates that there are so many different ways that you can make money in the markets, and there's never just one thesis that is right at any one time. People have different time horizons. They're looking at different sectors. They might be looking at individual companies. They might be looking at the macro picture. There's just because someone else has a different thesis to you doesn't mean you both can't make money in the market. And I think this was a good illustration of that. Two funds that I hadn't really heard of before, but both with interesting letters. So hopefully everyone can take a little bit out of that. Next up, an article on artificial intelligence and a theorized event called the intelligence explosion. And essentially what happens here is the intelligence explosion is a point where AI gains the ability to improve itself. And what that will lead to is, in a very short time, its intelligence will far exceed the intellectual potential of humans. What's theorized is that the relationship between AI and humans would be similar to what humans are to chickens at the moment, or humans are to ants at the moment. Just the intellectual ability of the two different species is so far removed that their ability to coexist is challenged. So, somewhat daunting, obviously just a theory at this point, but an interesting one to think about. Obviously there are some real challenges that would come with that. There's probably also some big opportunities that would come with that. Some problems that humans are struggling to solve would be able to be solved pretty quickly. So a really interesting article, and particularly focusing on one philosopher working on this theory in this field, Nick Bostrom. So an interesting one there, hopefully a little bit different to some of the other stuff you're reading. All right, third article in Thought Starters is titled "The Earnings Mirage: Are Corporate Profits Overstated?" And the team at O'Shaughnessy Asset Management have written a paper on some of their critiques of how companies state their profits currently. And their theory is that a lot of companies are actually overstating the amount of money they're making. And they go through and try and quantify how big that gap is between what they're actually earning and what they're saying they're earning, and then what that means. And obviously, if the profitability number's wrong, there's a lot of flow-on effects to other metrics, things like retained earnings, return on invested capital, and stuff like that. So it's obviously a very important one. The paper ends with a new metric, a metric that the team at O'Shaughnessy Asset Management suggest using instead of some of the more traditional metrics, and they backtest it back to 1952, and it has a stronger correlation to future 10-year S&P 500 returns than some of the other more well-known and commonly used metrics. So some of the ones that are more commonly used, you might have heard of the CAPE ratio, price to book is commonly used, price to earnings is obviously used. This one they suggest is a little bit different. It's called price to integrated equity, and I'll let you read the paper to read about it, but it's an interesting one, and yeah, definitely worth thinking about. Story number 4 is the story of Iraq, from Muhammad to ISIS. So just completely out of left field, this one, but for my mind, Iraq has been, it's been a constant of us growing up. From before we were born, there were the oil shocks, the first Gulf War, and then since we've been alive, we've essentially been in a state of war with Iraq since 2003, when we invaded them into fighting ISIS. And it's probably an oft talked about, little understood part of the world. So this article tells the story of Iraq really from its beginnings to post World War I, when the Europeans occupied it, to the rise of ISIS today. So I found this one interesting and just included it because I thought it was interesting. Hopefully you guys find it interesting as well. And then last one is a report by KKR. KKR are a big private equity fund in America. They're well known for a lot of their sort of leveraged buyouts and stuff like that. One that probably a lot of people have heard of is Toys R Us. They did a leveraged buyout of Toys R Us and then put all of the debt on Toys R Us's balance sheet, and that's part of the reason why Toys R Us is no longer with us. So KKR, they have about $150 billion in assets under management. They're one of the big players in private equity. And they have released a global macro trends report. And essentially it breaks down their view of the macroeconomic landscape. What are the key themes happening around the world? What are the investment considerations that come out of that, and any key risks that come out of that? Full of really interesting trends, data, charts, insights. Really, well-produced piece of research. So some useful insights in there for everyone. So yeah, that's Thought Starters. Few different pieces of work from different funds, some investor letters, a piece of work from O'Shaughnessy Asset Management, and a piece of work from KKR. And then in a completely different part, a geopolitical story on the story of Iraq, and then to top it all off, something on AI. So hopefully everyone gets something out of this one. If you haven't subscribed to Thought Starters but you're listening to these videos, I've got to ask why. Jump onto equitymates.com/thoughtstarters and sign up. And if you haven't subscribed to our YouTube channel, make sure you do that so you get these future videos once a week, but also all the other content that will be coming out. And goes without saying, but last but not least, if you haven't subscribed to the podcast, you should do that as well. All right, guys, until next week, thank you.